This one tax mistake will cost you lakhs. So make sure you fix this before March 2025. If you don't fix these three major tax mistakes before March 25, you could end up paying extra 2 to 5 lakhs in taxes. So let's break it down for you and see how you can legally save taxes. Mistake number 1. Ignoring presumptive taxation under section 44AD and 44ADA of the Income Tax Act. So this is mainly relevant for freelancers and business owners. If you're a freelancer, consultant or a small business owner and you're paying taxes on your entire income, you're making a huge mistake. India's Presumptive Taxation Scheme, also known as PTS, allows you to reduce taxable income legally without needing to show actual expenses. So do you know how it works? So if you're a CA, lawyer, IT professional, consultant, influencer, architect, you can declare only 50% of your income as taxable income. Like say for instance, if you're earning 20 lakhs per annum, you only need to pay taxes on rupees 10 lakhs. And the remaining 10 lakhs is assumed as expenses. You don't need to even maintain books of records. You don't need to do anything about it. So normally, if you wouldn't have opted for this provision, you would have to pay around 4.5 lakhs in taxes. But with 44 ADA, your tax liability can be reduced to rupees 1.5 lakhs or even less. So this was all about section 44 ADA. Next is 44 AD, which is mainly relevant for the small businesses. So if your turnover is up to rupees 3 crores for digital transactions, you need to pay taxes only on 6% of the revenue. For example, if your total business revenue is rupees 50 lakhs, instead of paying taxes on rupees 50 lakhs, you will be taxed only on rupees 3 lakhs. So make sure you fix this before 31st March 2025. Next is which ITR to choose. So you need to file ITR 4 to claim the presumptive taxation benefits. So also there is one more provision which you should be knowing. If your actual expenses are high, compare it with normal tax filing to choose the best option. Like you can compute your taxes based on both the methods and choose whatever is more suitable and whichever is giving you more tax benefit. Mistake number 2, not optimizing your salary structure. So this is a particular mistake which is mostly relevant to the professionals and who are mostly salaried employees. So when I say salary structure, what I really mean is that HRA, LTA, NPS and perks. So if you're a salaried employee and taking your entire income as fixed salary, you're overpaying taxes, bro. Your salary breakup plays a critical role in reducing your tax liability. So how can you save taxes? First is house rent allowance. So if you're living on rent, please ensure that you're claiming the maximum HRA exemption based on your salary and your rent. Like say for example, if you are living in a house which is owned by your parents, you can pay them rent and you can claim HRA while they can declare rental income in their ITRs. Second is LTA, which is leave travel allowance. So did you know that your travel expenses within India can be tax-free? The answer is yes. LTA is allowed only twice in 4 years bracket and 2024-2025 is the last year of this cycle. If you haven't claimed it yet, it's high time. Go and talk to your manager, get your salary restructured before March 2025. Third is NPS. Under section 80 CCD subsection 2. If your employer contributes to your NPS account, you can claim an additional 50,000 rupees tax reduction. Yes, over and above your ATC. So ATC already gives you 1,50,000. This will give you additional 50,000. So yes, again, don't forget to fix this before 31st March 2025. Talk to your HR, restructure your salary to include all of these items in your salary so that you can restructure your salary and that will help you to save a lot of taxes. You can also add some reimbursements also like fuel, meal, phone, gadgets allowance. And also if you haven't planned an LTA trip yet, book it before March 25 to maximize your tax benefits. Mistake number 3. Mistake number 3 is paying unnecessary tax on capital gains under section 54, 54F and mostly section 112A. Don't worry, I'll explain you each of these sections. So if you have sold stocks, mutual funds and property, you could be paying extra tax unnecessarily just because of poor tax planning. But don't worry, I am here. Most people pay long-term capital gain tax without realizing that they can completely avoid it legally. Yes. So how can we do it? For stocks and mutual fund gains, under section 112A, there is a provision that you can claim an exemption of rupees 1.25 lakhs. So you can withdraw 1.25 lakhs of LTCG every year tax-free. Let's say for example, if you have 2 lakhs in capital gain, you can withdraw 1.25 lakhs right now. When I say withdraw, basically square off your position and realize the gains up to rupees 1.25 lakhs. and the remaining amount of gains which you have, you can basically square it off in the next year and you can claim deduction in the next year. So in a way, you're saving 12.5% on that capital gains of rupees 1.25 lakhs. Next is property sales, which will be covered under section 54 and 54F. If you have sold a property, you can completely avoid capital gains tax by reinvesting in another property within 2 years or constructing a house within 3 years. If you don't want to buy another property, invest in capital gain bonds. There are various bonds which are listed out there. If you want a list, just comment and I'll give you the list. But for the bonds, you need to invest it within 6 months to save taxes, and the limit is up to rupees 50 lakhs you can save on the capital gains. So again, fix this before 31st March 2025. Next is you can also use tax harvesting to book LTCG profits within the 1.25 lakhs exemption limit before the financial year ends. If you have sold a property, plan your reinvestment before the deadline to claim tax benefits. So guys, it's high time. It's Feb. Do it right now. Check your salary structure, capital gains, optimize your tax saving options. Go talk to your HR, talk to your manager, restructure your salary. But do this before 31st March 2025. If you found this video useful, please give me a thumbs up. It will be really big support to me. And also don't forget to subscribe and share it with your circle. Okay, thank you. Bye-bye.